Hello beautiful traders, welcome back to Sobodo FX community. A lot of traders have got difficulties as to when to enter the market, where to put their stop loss and take profit. In today's video, I'm going to give you a hack, a tip as to how you can do it with accuracy and precision. You see, and this trade is going to play out. This is a profit target. So guys, now you see, this was the analysis I told you of. Now, our first TP got smash, second TP got smash. Just do yourself a favor. Whilst watching the video, please take note because it's essential. Without wasting much of your time, let's dive into the video. Okay folks, let me show you how you can set up your fib. Okay, so this is how you can set up your fib. As you can see, these are the values we are interested in: 0.886, 0.618, 1, negative 0.786, negative 0.27, 0.5, 0.786, 1.1, as you can see on the screen here. So these are the values we already have on the fib, on the Fibonacci here, as you can see. So now let's see what are the significance of this value, how we can manipulate, how we can work along these values in order for us to be a profitable trader. Now here are the significance of this value. 50 is what? The equilibrium price. At 50 will take no action. 61.8 is our PRZ plus candlestick pattern. So when price come to this zone, we're expecting it to come to this zone and continue moving. Okay, but when market comes to this zone, these are the 7 candlestick pattern you should be looking for at your PRZ levels. Okay, the same thing for 78.6 also is also a price reversal zone. Then we can also place our limit order with a very small position. Like when price comes to this zone, you see, we can put a buy limit at this level. Let's say for example, price was moving down and upon coming back to this zone and drop, here we can put our sell limit, here buy limit. You see, with the expectation that price will come and reverse from this zone and continue moving. It will execute your orders and continue moving in that direction. Here as well, price moving down, you put your sell limit at this level. It will come execute your orders and continue selling in that direction. 88.60, the same thing. Here, since it is a deep reversal zone, you see, it is a bit deep. So you can put with some big position and with the expectation that price comes and continue moving. Here as well, the same thing when it comes to 88.6. Much position, a bigger position with respect to your risk management. Okay, then we have 110. As you can see, this 110, this is where we should place our stop loss. Always this level is where we always put our stop loss. These are our stop loss level. 110 is for our stop loss. Negative 27 is our first take profit, as you can see. Negative 78.6 are final TP. You see, these are our take profit, stop loss. Okay, just a quick reminder, if you find this video useful, if this video is of any help to you, please
Like and subscribe. By so doing, it will help grow the community. Subscribe now. What are you waiting for? Just subscribe.
Make sure you have all these values on your Fibonacci tool. Okay. After that, after you've input these values, remember these are the values once again. After you've input these values on your Fibonacci tool, then like for example, we want to buy, right? This structure here. Let's see here. Higher highs, higher lows, higher highs. So we notice price was moving higher highs, higher lows, higher high. This is a buy structure. You see, the moment we got a high higher than this, which is this one here, then we use now our Fibonacci tool by placing our fib at that level all the way to the higher high which was created. We notice this high is higher than this high. Okay, so if the market retraces, we're expecting the market to retrace into one of these zones. Okay, let's say you buy at 78.6 and this is your stop loss at this level. You see, always this level 110 should always be your stop loss. Okay, let's say you buy at that level, this is your entry point, right? And this is your stop loss. You see, voila, you are risking at 36.9 pips. This is your first TP and this is the final TP. You see, here at 00 you can take what? A partial profit. Then here you can take the first TP, second TP. So basically this is how it works. So here you already know where to place your stop loss at 110. Always, no matter what, 110 should always be your stop loss. You see, that's why risk management is key. Risk management is a key. So let's do this. Since you've noticed, for example, you said, okay, for me, I want to enter at 78. Let's say you want to enter at 78.6, right? Voila. And you are risking your stop loss. Your stop loss is at 36 pips. You see, this is your stop loss. Now, let's say you have $1,000 and you are risking $100. Okay. Then your position size PS will be equal to the amount of money you are risking, which is $100, divided by the stop loss. In that case, we were risking 36, right? Voila, which should be equal to, which is like 360. Let's say you are risking 36 pips, right? Which is like 360 pips, 360 points. Okay, so in order to know your position size, and assuming that you have a 1K account and you are risking only $100 per trade. Okay, so now your position size is the $100 you are risking divided by the number of stop loss, which is 360 points, which is 36 pips. So $100 divided by 36, you now get 0.2277, which is 0.2. Let's just say 0.2 like that. So you are entering at this level, you just open 0.2, poop, and your stop loss is at this level, and then you leave the rest to run. Simply, this is how you do. Let's see another example here. Here, you've noticed this high is lower than this high. In essence, we have this high which was being created, and it is higher than this previous high. Okay, so what we will do here is to what? Put our fib at this level, the recent swing low to the recent swing high, you see, and this is our stop loss. So if we want to enter this trade by going long, we always have our stop loss first at that level, and then 0.6. Let's say you enter at 78.6. Your stop loss is at this is your stop loss level. Here you are risking 32 pips. So you do the same mathematics here. You enter, instead of 360 now, here you put 320 in point, you see. The answer will be your position size on entering that trade, you see. And 0 always make sure you take maybe a partial profit, then first TP, second TP. Here's another trade example. We see price traded, let's see, if you notice, price was still moving, higher highs, higher lows, higher highs, higher lows, higher high, until price created some sort of low which is lower than this low, previous low created here. Then in that case we use our fib, you see. So where is our stop loss? Remember, always this is our stop loss level, this level, you see. And then let's say you want to enter at 61.8. let's say that's your entry position. Right? You want to enter at that level, and then this is your target, your TP target. So now here you will be having what? 85 pip stop loss. Here instead of 360 we'll put 850. So 100 divided by 850, we get 0.1176, something like that. So basically you enter 0.1 stop loss, you see. Position, that's your position size. You enter with 0.1, this is your position size, PS, position size. So at this level you enter with 0.1, and remember you are risking this amount, you are risking 85 to get what? 254, you see. Secondly, we said when price comes to those levels, you also look for some candlestick pattern formation, some reversal candlestick pattern. Okay, like here, as you can see, these are 7 powerful reversal candlesticks pattern. This, if you are looking to go long, these are the bullish candlestick pattern you should be looking for. Doji, the engulfing pattern, piercing line and dark cloud, the hammering, hammer and shooting star, spin it up, ray track patterns. When it forms in this manner, these are for bullish, and here on the left are for what? Bearish. So here, if you noticed, what candlestick pattern formation that will give us a confirmation in order to enter this trade? As you can see here, price initially at 61, we got what? Bearish, engulfing pattern. Second, we got what? The Harami engulfing pattern. Right from there would have entered. The moment these two is a combination of what? The Harami pattern, and the market then collapse to the downside. Okay, let's take a look at this low as well. You see, price creates lower low, lower low. So we place our Fibonacci right at this level. You see, right at the top of the wick. At the top of the wick, you see here, to the lowest low of the wick. Remember, you see on the wicks, you see, voila, like that. And this is our stop loss level right from there. And then this is our target. Okay, so what candlestick pattern formation can you see here in order to buy? Let's go back to our candlestick pattern. Amongst these 7 reversal candlestick pattern, what candlestick pattern formation you saw on that chart here? So the moment you spot that candlestick pattern formation, then you trigger the market. Here as well, we've saw this high, low, high. Okay, 1, 2, 3, 4, a buy structure. So then on the wicks to the high, this is our stop loss level. This is our stop loss. Then from 61, because we saw this Harami pattern, you see here, the Harami pattern which formed here, and what happened? We enter at that level and our stop loss right there. You see, same thing. This high, which high that is higher than this high? Let's see. 1, 2, 3. So we've noticed this high is higher than this high, also higher than this high. So if price is to retrace, we put our stop loss to the recent swing low to swing high on the wicks. On the wicks. Recent swing low to recent swing high. On the wicks. On the wicks. On the wicks, you see, on the wicks. So here you notice price even dip down and hit our stop loss. That's why you always make sure here, if we would have entered this trade, let's say for example here we saw this shooting star, you see this shooting star, spin it up, and then we enter right from there, and our stop loss at that level as usual. Please make sure you don't enter blindly. Make sure you wait for your reversal candlestick pattern confirmation. These are the reversal candlestick pattern. Make sure the moment you sense these patterns around those PRZ zones, that's when you enter the trade. Okay, here is this one again. We have this high, low, high. This is from the low on the week to the week. You see, enter at this level. You see, because we saw what bullish engulfing pattern. You see, bullish engulfing pattern here. Then we saw some sort of a shooting star at this level, hammering pattern. Then immediately this guy closed. Price came back to, let's say you enter at 61, because at 61 we already have our confirmation, and where our stop loss is at this level. Targeting, our target is right there. So here you have 600 points. So whatsoever amount of money you are risking divided by 600 and 600 points, the answer is your position size. Okay, you see here as well, the structure of the market: low, high, low, high, low. So we notice here we have some sort of what sell structure. We use our Fibonacci at this high to this low on the wicks. This is our stop loss level. We want to go short, put our stop loss first. Voila. Then let's say our entry at 61. At 61, we notice some sort of what shooting stars. You see, we enter right from there, and what, as usual, this is our target, and you are risking 33 pips. Also at this level to this low. You see why? Because this high, this was the previous high, lower high, which was created. Price formed a lower low, lower high, lower low, was now consolidating around this angle. You see, and price tends to go to the upside. You see, so in that case, this structure is still some sort of what sell structure. So we're expecting the market to do some retracement, and if we are to sell, this is our stop loss. Always our stop loss at that level. That's our stop loss level. And maybe we'll look for some sort of candlestick pattern, you see, at this level. Then we decide that 88.6 will enter. Or if you were to place a sell limit at 88.6, then remember your stop loss is 390 points divided by the amount of money you wanted to risk, you are willing to risk, divide by 390 equals your position size you are to enter in this trade. And as usual, this is our target. You see, so you see here, if you noticed, the reason why I said 0 should always be your partial profit, take profit, then first profit. Price will not in all cases, price will always come to this level. So that's why as it start moving, you start locking your profit. Take some profit, take some off the table. So basically, that's how I use Fibonacci to enter and to exit my trade, and also it will help me to what? To know where to place my stop loss. So basically that's how I use my Fibonacci to what? To help me locate my stop loss, my entry and exit point. Yeah, the same principle work on higher time frames. Okay, let's say here on the 1 hour time frame, we've noticed the structure is like this: higher high, higher low, higher highs, higher lows, higher highs. Structure got broke to the downside. You see, lower low, lower high, lower low. So all seeing this is what? A sell structure. Now we place our fib from this high to this low. So if you've noticed, this is our first TP, this is our final TP. Our final TP is at this level. We mark those levels. Then here, partially take this profit, partial profit at 0.0. Then how to enter this trade? Remember, this is always your stop loss. Your stop loss always at that level. Let's say we put our limit order at 88. You see, right? At 88, our limit order got triggered, or you wait for instant execution. In order for you to enter this trade, at 88, this is a deep retracement. We then saw what? The bearish engulfing pattern. Right from there, then you enter this trade. You see. So you already know how many pips you are to risk, which is like 47.8 pips, and then you enter it at this level. So the amount of money you are willing to risk, whether $100, $200 or whatsoever, divided by 407 points. Whatsoever answer you get is your position size. That's the number of lot size you are to enter. Boom. And you see, this trade is working out nicely. You see, and this trade is going to play out. This is a profit target. You see, remember, you're only risking 47 pips to gain how many? 364 pips. The same principle works on higher time frame. Okay, folks, if you remember, this was the analysis we did, and market is doing exactly as we said. First TP got heated. This was the FOMC, Fed interest rate, spiked the market up again, but we are still going back to the normal direction of this market. We are still waiting all the way to get what?
Just a quick reminder, if you find this video useful, if this video is of any help to you, please like and subscribe. By so doing, it will help grow the community. Subscribe now. What are you waiting for? Just subscribe. So guys, now you see, this was the analysis I told you of. Now our first TP got smash, second TP got smash.
So basically, this is how you entered, place your stop loss and exit point by just using Fibonacci to